Well, welcome back to OpenLine. We are talking about economic inclusion in Nashville. The city's booming, but what about areas and people that are left behind? What can be done? Happy to have with us John Murphy. He's a senior advisor for the Economic Inclusion Office of Mayor Barry. Thanks for being here. All right, so you've come out with this report. Came out in October. We've gone through a few of the key recommendations. I want to go through a few more here that are interesting. So there's one about loans, support small dollar loan alternatives. What does that mean?
We want there to be a robust marketplace for accessing small dollar loans. It shouldn't just be in the province of the deferred presentment institutions. There should be a broader reach. Credit unions provide a really good alternative to provide these types of loans. They fall under a different type of regulation. They're also monitored differently. They have a different regulator. And they have the ability to access, for a certain type of credit union called a Community Development Financial Institution, or CDFI for short, which was created under the Clinton administration. They can access pools of money as grants from the Treasury Department to do specifically community development in low and moderate income communities. We happen to have a CDFI in Nashville called U.S. Community Credit Union, which does a phenomenal job benefiting the low and moderate income community. We partnered, the Financial Empowerment Center, which is a private-public partnership between the Mayor's Office and United Way, partnered with USCCU on something called the Opportunity Loan. So a consumer that currently has a payday loan could go to a financial counselor, restructure their budget, know how much they can pay it off. Working with a financial counselor, that counselor can then access the opportunity loan that's provided by USCCU, and then they can pay off the remaining balance of that payday loan, and then restructure that loan product to a much lower interest rate.
Right.
Something in, depending on, I know I quote interest rates, but depending on someone's credit score, on income, etc. But the highest it can go is 39%, which sounds very high, but comparatively to 325%, I'll take it.
Right, a lot better.
A lot better.
When we're talking about small dollar loans, what is the level we're talking about? How much generally?
In common, you see somewhere between $250, $500 as in terms of a very, very low dollar, smaller loan. A lot of people would say, well, why can't they just access a credit card? For a lot of that community, they don't have the credit history. And this actually goes back to one of the previous calls about using just cash. In our modern economy, it's very difficult to only use cash. If you're credit invisible, it's hard to access a line of emergency credit. And that, again, it's a double-edged sword. Yes, you don't want to fall into bad credit, but having good credit and understanding how to use credit, that's where we want people to be.
And when we talk about loans, so there are those loans that help people just get through life. Something comes up and it's to pay off this or pay off that. What about taking it to that next level? People getting loans of a more entrepreneurial type thing.
Yeah.
And maybe in a neighborhood where banks don't often lend, and maybe they don't have perfect credit, but they have a great idea.
Yeah.
They want to start a business that would employ people and turn a block around, turn a neighborhood around. What about those kinds of things?
That is a perfect question. There are multiple different types of CDFIs, the Community Development Financial Institutions. We also happen to have a CDFI that specializes in small business development. It's called Pathway Lending. And Pathway can provide very risky, or what would be another bank would consider a very risky loan, and they can extend that loan to more risky entrepreneurs who may have low credit scores or may not have the business background, but they've been operating a barber shop in their home for 10 years. They have the expertise, they have the clientele, but they don't know personal finance, they don't know business finance. Most banks will likely not lend to that type of customer, but Pathways can. And again, it's really because they can leverage those grants from the CDFI fund, but also through other financial institutions like Pinnacle Financial Partners that have Community Reinvestment Act credits that they have to satisfy can make deposits into CDFIs, and then the CDFI can then re-leverage that, that deposit to attract more capital.
So that is something that's out there.
Absolutely.
All right, I'm glad to hear. Let's go to Gene. Hello, Gene.
Yes.
Go right ahead. What's on your mind?
Yeah, it kind of disturbs me that we say that that a cash type of existence isn't something that's really feasible.
Right.
No, it is. But the problem is that you've been talking about some very good ideas as far as trying to re-educate. But there's going to come a break point where if we want to have a society that is responsible as far as finances are concerned, you're going to have some tough love. You can't continually say, loan this, loan this, loan that. There has to be a cutoff. And for us to say that cash is not necessarily viable, that's an insult to everyone. We need to make sure that, you know, we get back to an, I guess if you want to call grandmother and granddad's type thinking, that if you don't have cash, you don't buy for it. You don't buy a $600 or $700 or $800 iPhone. You don't buy a $30,000 car if you haven't got the money to pay for it.
Right.
There is viable alternatives in every part of existence if we just look for it. But we can't keep propping up and propping up and propping up. Thanks, guys.
Well, thank you. What do you think there?
Yeah, Gene, I think, you know, absolutely you make a great point. I don't think that the point that I was trying to make was that only using cash is infeasible, but knowing how to use credit wisely, I think is the point that I was trying to make. There, in our modern economy, the ability to access credit largely depends on someone's success, and we need individuals to understand how to use that credit wisely is the difference. You're absolutely right. You shouldn't be spending money that you don't have on something like an iPhone or new shoes or clothing products. But when you go to buy a house and have a mortgage or need a car and get a car loan, your credit history, you know, depends on having that history to substantiate the need for that loan. And there are some people that are certainly blessed to be able to buy homes with just cash, but for a large part of the economy, that's just not the case.
As you study this, how optimistic are you that we can make a real dent in the problem? That we can really turn this around? And I guess, what, we have like a minute for this? Okay, good. We have a minute. How optimistic are you that we can make a real dent in this problem and really turn things around for huge numbers of people?
If we prioritize smart public policy that is coupled with direct, intentional programs like having financial counseling and coaching be an access for everyone in our economy, I have a lot of confidence that we can turn this around. We just need the will to dedicate ourselves to having smart public policy that is not dominated by any type of political ideology, but that it just makes the most efficient and effective sense for our economy.
When you say some of those things, then I become concerned, because I don't know that we're moving in that direction. But it's good that this has been studied and thought about, but you're optimistic.
I'm very optimistic.
All right, that's great. All right, well, let's take a break. We'll come back, wrap everything up. Be back right after this.